But we're in an environment right now that if you're not scared right now and you're bullish, you should be scared. I mean, you're way better to be a nervous investor and have a game plan for if the brown stuff hits the fan and it never happens, than it is to be somebody who's just riding this up blindly thinking you know what's happening, and then a piece of news or something comes out and your account just loses 20 or 50% over the next 4, 5, 6 months.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 8th through July 15th, 2025, while supplies last. First this week, we have 90% constitutional junk silver at spot price. That's right, no premium at all, just spot. Next, backdated 1-ounce platinum eagles are only $249 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Chris Vermeulen from thetechnicaltraders.com. Chris, thank you so much for joining us today.
Always a pleasure, Elijah. Thanks for having me.
Well, it's great to have you today, and we are seeing a bit of a sell-off in the metals today. Not too dramatic, but I did want to get your take on the market action we've seen really since the passage of Trump's big, beautiful bill. Your perspective on all this.
Yeah, I mean, I think a lot of stuff's unfolded over the past 2 weeks, really. We've seen the NASDAQ break to new all-time highs, which has got a lot of people excited and bullish. It's also created a lot of people who are betting on the markets that had put in a top, they thought. It's put a lot of people on the wrong side of the markets. And then a few days later, we saw the S&P 500 break to new all-time highs. And that really is kind of the big barometer for me. Now we're really starting to see people turn very bullish, and they're piling into the stock market. We're seeing lots of shorts cover. People who are betting on falling prices have to get out of those plays because now the stock market has no overhead resistance. It's at all-time highs. And we're seeing money pile into growth stocks. We're seeing, NVIDIA's breaking to new all-time highs. The small cap stocks are on fire. So people are moving into risky, fast-moving companies because they want to make a lot of money. And, when money's going into growth stocks, it's usually coming out of somewhere. It has to come from somewhere to reinvest, right? And so we've been seeing gold and silver. They've been trading sideways. They're slightly lower over the past couple of weeks, really. They're taking a bit of a breather still. And I think we're going to see gold and silver move a lot higher, actually, still. I think as soon as the stock market, this little wave of the all-time highs, causing people to cover their shorts and FOMO, people who missed the whole rally saying, I got to get in now. It's like they're chasing pricing higher. Once that wave fizzles out, potentially over the next week or so, I think that's when gold and silver will actually start another leg higher. I think silver could go to about $40, $40.80. I think gold could rally to about $4,090 an ounce. So, I think we're getting close to a nice move in gold, but right now it's just taking a breather. Both metals are just chopping sideways as money rotates into more exciting stuff. People love to chase stocks, so.
It is interesting seeing the stock market again at all-time highs when just a few months ago, a lot of people were expecting this to be the big crash. But if we look again at the gold and silver markets, if you want to maybe pull up the charts here for us and kind of explain some of those price points you're talking about, $40 for silver and even $4,000 for gold.
Sure. Yeah. We'll take a look at the chart of gold here real quick first. If we take a look at the chart of gold, and if we just zoom back a couple of years here, more or less we've seen gold have a series of, it has a rally, and then we tend to see it consolidate sideways for a while. These are very bullish types of price patterns. A lot of people get nervous that they become bearish on things, but what happens is, gold has a series of rally, pause, rally, pause. These pauses, these rallies and pauses are called bull flags. If the price goes up, it creates the flagpole, and then price flags sideways, and it creates just a pause. The market's recalibrating, rebuilding energy before it starts that next move. And that's where we've been really for the last several months for gold. It has this big move. And as you know, Elijah, one of my favorite tools is Fibonacci extensions, which Fibonacci theory, if you look up the number sequence, it's in everything in the universe. It is super powerful. And there's a golden sequence that I like to follow, which it's also called the golden ratio. If we just look at this last rally up to the high that we saw several months ago and the strength of the pullback, and we kind of carry that forward, we can get an idea where gold should rally to next. And it is showing about 3,700 is the next upside kind of surge for gold. And then they'll probably pause around there. The 618 extension is called the golden ratio. This is where price usually has a hiccup or it reverses directions. It has some type of pause there. So if we do run up, that's the level that, a lot of people can lock in some partial profits or just expect it to have a pause and a pullback. And if it does pause or pull back at that specific number, it usually means we're going to go up and hit the 100 level, the 100% measured move. And that is simply based on this rally, this straight up rally from the previous low, the flagpole, that is the same 100% distance to the next target. A bull flag is a halfway point. So once you've seen that bull flag form, you're like, okay, half of the move is done, but we still have the second half. And so that gives us to about 4,100 an ounce to the upside. And we're in this unique situation, very similar to 2007, just before the stock market, actually just as the stock market was making new all-time highs, just like we are right now, gold started to come to life and gold had one more big push higher. And so there's a very interesting, chart setup, very similar to that time window. And we could see gold and silver have this big push to the upside over the next 2 or 3 months. Could be pretty explosive. And that would probably also mean the stock market is stalling out and going sideways or pulling back. Now, if we take a look at silver real quick, silver's down about 1% today. Gold's down about 1% as well. Silver has a very similar type of price action. It's more volatile. It's usually kind of more explosive. We have a rally up and then it's flagged sideways. And we've had a rally up, it's flagging sideways. And with the same type of analysis, we can take the lows up to the high and we can come back down to this recent low. And it gives us these levels to draw for silver, which is about $40.60, somewhere in there. So I would expect silver over the next, now this is the daily chart. So over the next month, over the next 20 bars, I'm expecting we're going to see silver run up to about 38.50, have some type of little pause or hiccup for a few days, and then probably have some blow off move for that second half up to about $40.60. And I think gold and silver will do these at the same time. Silver's come to life. It's played catch up with what gold has done. And I think both of them are a good play. I don't know which one is the better play. I think gold is more consistent. You're probably a better possibility of gold hitting those targets than silver is. But silver has got that percentage move. It moves faster. So I like both of these because they are a metal. They're commodity, they're outside of the stock market. And if the stock market actually gets weak, we should actually see money want to move into physical metals. So, and we're in a unique situation where there's enough uncertainty and stuff going on that gold and silver are going to, I think, want to keep going higher anyway. So I like the precious metals space here. I thought the metals were going to top out several months ago, but instead they've formed this beautiful this bull flag pattern, and it's actually now pointing to higher pricing. So that's kind of my take on both of those from a technical standpoint.
Now, what about platinum? I know we've seen an increase of about 40% this year. Your take on that move, and do you anticipate further upside going forward?
Yeah, let me see if I can pull that up. So if we take a look at platinum, it has had a very explosive move, huge move recently. Now, I'm not a huge fan of this chart pattern now. I feel like it's a little overdone. What it has done is formed a running correction, meaning prices ran up for the bull flag, the flagpole pattern, but instead of flagging sideways or downward, it's actually flagging up. It's called a running correction. And a running correction means it's channeling higher, and it has these very sharp sell-offs and sharp rallies back and forth. And it's extra violent. And so what it's doing is it's correcting, it's shaking traders, sucking traders in, shaking them out back and forth. It's correcting as it's still running higher. And that's why it's called a running correction. And the problem with these is they're really violent when they end. It could end with typically usually ends to the downside eventually, but it could end up with an explosive rally to the upside. We could see, 1550, 1600 an ounce. It could be very explosive, but then it's probably going to end with a very sharp collapse. So you don't know if it's going to have the blow off top and sharp reversal, or if it is going to have like just a sharp reversal down and a big red bar where, in 1 month or a week, it gives back pretty much all of those gains. So I'm not a huge fan of it. There's big volume you can see here in the futures market. I think also with the ETF that allows people to trade platinum with an ETF, huge volume. So it's becoming that crowded trade. A lot of people have piled into it. So I like gold and silver over this. This one's had its move, and now it's showing signs of risk, volatility. Silver and gold are showing signs of stability in upward targets.
Do you think there's any meaning in the gold platinum ratio? Because a lot of people point to that, showing that, gold is still 2.5 times the price of platinum right now. So it's the platinum is incredibly undervalued historically, but do you put much weight into those kinds of ratios?
I never put any weight into it, into the gold and silver ratios. But yeah, it's funny because I remember when I was younger, platinum platinum was worth more, but now it's not worth nearly as much. No, I don't trade off ratios. I trade off price action, and ratios can be out of whack for so many years, and it'll just put you on the wrong side of the trade or in the wrong commodity. Just follow price. Pick the one that has built a base and a launch pad. It's got an uptrend and looks good versus, trying to get fancy with ratios. I don't believe in the ratio stuff. Eventually it'll play out because everything oscillates, it's a pendulum, but pendulums can be out of whack for decades in some cases, and it's your best to just follow price and stick with the best investment at any given time versus trying to play a ratio.
No, when it comes to the dollar, I know that's something that has been weakening recently, below 100 for quite a while now and breaking below other levels as well. Your take on the dollar index and the significance of that going forward?
Yeah, the dollar, it's one of the most hated assets. It's funny, if you go back to the stock market top in 2007, we actually saw gold was hitting new all-time highs. Everyone loved gold. Is in a strong uptrend, just like it is now. It's undeniably, do not bet against gold. Lots of uncertainty going on. And the dollar had gone straight down. It was crushed. It was so hated. It was one of the most hated assets. You look at what's going on right now, we've got the stock market showing signs that it's overvalued. It feels like it could top significantly at any time. Everybody's moving into gold, or not everybody's moving into gold, but gold is moving higher, hitting all-time highs. And the dollar is in the dumps. It's in a downtrend. Everybody hates it. And that's usually, these are turning points, right? When everybody loves one thing and they hate the other and they're beat up and they're both at extremes, usually there's going to be some reversion to the mean, some type of reversal, whether it's a bounce in the dollar or a big rally. I'm not sure. But if we do go into some economic recession, something big, the dollar will probably come back to life. The U.S. Is a powerhouse. There's no doubt about it. And when things get ugly, the dollar tends to do pretty well. You don't want to bet against the U.S. So that's what I think. I think the dollar is going to have a strong bounce. I think the equities market and gold will eventually put in a top, but you definitely don't want to fight these trends. Wait for these reversals, because when these reversals happen, all these assets will actually be a very good trade. You just need to make sure you trade with the new direction when they happen.
No, I guess, but you mentioned there's a lot of uncertainty in the markets right now. So what would be maybe your final thoughts for our viewers trading these markets, or just investing maybe for the long term? How do they keep a level head when everything is going crazy?
Yeah, that's a good point. There's sentiment has really shifted among investors. A few months ago, as everything was falling apart and the tariff talk was killing the stock market, everybody was looking for safety. Everybody's investment accounts were down sharply because, of course, everybody believes in always diversifying and holding on to stocks and bonds, and they just got beat up. We're in a phase now where the markets are going higher, and in a lot of cases, it's not because people really know what they're doing when it comes to trading or investing. It's just they're naturally told to invest and diversify, so they're in the markets. So when the market's going up, they know what they're doing because their account's going up. But the reality is people don't know what to do in the markets. They don't realize, very wealthy people are forward-looking, they're proactive, they front run and look for problems coming so they're ready for when they do happen. And if they don't happen, it doesn't matter. At least they have a game plan for if and when it does. And so right now people are seeing the markets at all-time highs. They don't see the risk. They think we're starting a new bull market. They think because their account's going up, they know what they're doing. And this is the reality. I've seen this happen. I've been doing this since 2001 with investors, with my investment newsletter. And it's the same cycle over and over again. Most people don't do anything until they're losing money, until the markets are crashing. There's red bar after red bar, and they realize they don't know what to do and they're scared. But we're in an environment right now that if you're not scared right now and you're bullish, you should be scared. I mean, you're way better to be a nervous investor and have a game plan for if the brown stuff hits the fan and it never happens than it is to be somebody who's just riding this up blindly thinking you know what's happening, and then a piece of news or something comes out and your account just loses 20 or 50% over the next 4, 5, 6 months. So people just need to have a game plan, realize that you have to protect your capital. Buy and hold is not a way. Eventually, we're going to hit a big bear market, and it's going to cost you 5 or 10 years of no returns and severe stress and drawdowns, losses. So just people need to educate themselves on what to do if this market, and when it does. Eventually, we'll have one. So it's not a matter of if, it's just a matter of when. Have a game plan to move to safety, even cash. Cash is a position, especially when everything's falling. There's nothing better than earning 4% interest when everyone else's accounts are falling and everything else is dropping in value. So that's kind of what I like to share.
Well, we always appreciate your insights, Chris. If people are interested in learning more, they can go to thetechnicaltraders.com. Did you want to share a bit about that?
Sure, yeah, at my newsletter. So what it is I share an ETF trading investment newsletter. We've got about 5 to 12 trades a year. I really just trade my own portfolio. I share my exact trades, my portfolio allocation. I tell you when to get in, when to get out, where our profit targets are, all of that stuff. So you're really just riding the coattails. I follow the markets extremely closely. Then you can copy exactly the trades I do, and we all just navigate these markets no matter what they do. There's always a position to be in to protect yourself or to make money from both rising and falling and even sideways markets. So that's what I do. I just protect, number one, my own account, and everyone can ride and copy exactly what I do.
Perfect. Well, thank you so much, Chris, for your time today, and God bless.
Thanks, Elijah. Take care.
This is Kaiser Johnson with Liberty in Finance, and these are the Miles Franklin Weekly Specials for July 8th through July 15th, 2025, while supplies last. First this week, we have 90% constitutional junk silver at spot price. That's right, no premium at all, just spot. Next, backdated 1-ounce platinum eagles are only $249 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.